Welcome to the deep dive. Today, we're really zeroing in on SoundHound AI.
Yep, looking at their latest numbers.
Exactly, their first quarter 2025 financials. We've got a couple of reports here, both dropped on May 8th. One's from Guru Focus, sort of an analysis piece.
And the other is straight from the horse's mouth, SoundHound AI's own press release.
Right. So our goal really is to cut through all the finance speak and figure out the main story. How is this voice AI company actually doing? And, what might it mean for AI popping up more in our everyday lives?
For sure. And having these two different takes is useful. Guru Focus gives us that maybe more objective analyst view, benchmarking them.
Right, against expectations and valuations.
While SoundHound's release naturally will highlight their wins, their strategy. Putting them together should give us, hopefully, a clearer picture.
Okay, let's jump straight into revenue then. Guru Focus pegs it at $29.1 million for Q1. But they do point out it was just a bit under what analysts were forecasting, which was closer to $30.38 million.
Yeah, that's always a flag analyst watch. Missing consensus even slightly can raise eyebrows about, the growth pace.
But how does SoundHound frame that same number?
Well, interestingly, their press release also says $29.1 million.
Right.
But the spin is different. They're calling it a record first quarter.
Ah.
And they emphasize it's a 151% increase from Q1 last year, which was only $11.6 million or so.
Wow, okay, 151% is huge growth year over year.
Exactly. So same number, two different stories. SoundHound's focusing on that big jump from last year as proof of momentum.
While analysts are maybe more focused on hitting those short-term targets?
Precisely. Both valid points, just different angles.
So zooming out a bit then, what are the analysts thinking more broadly about SoundHound's future beyond just this quarter's revenue miss?
Guru Focus gives us some clues there. They mentioned 7 analysts covering the stock gave one-year price targets.
Okay.
The average comes out to $14.36. But there's a pretty big range, a high of $26 down to a low of $8.
Quite a spread.
It is. But compared to the price when the report came out, which was $9.74, that average target implies potential upside of over 47%.
So generally positive sentiment from the analysts then.
Seems like it, yeah. On average, they see room for growth.
And what about the overall buy, sell, hold recommendation?
The average brokerage rating is 2.3. On that scale where 1 is a strong buy and 5 is a sell.
2.3 is pretty decent.
It is. It translates to an outperform rating. So despite maybe not hitting that exact revenue number, the analysts overall seem to think SoundHound will do better than the broader market.
Interesting. So the market watchers lean positive, but then Guru Focus brings in this other metric, the GF value. What's the deal with that?
Right, the GF value. That's Guru Focus's own calculation, is their attempt to estimate what they think the stock's fair or intrinsic value is.
So not a price target, more like a what it's worth right now estimate.
Kinda, yeah. It's based on things like historical trading multiples, the company's past growth track record, and importantly, analyst estimates of future performance.
Okay, so what did Guru Focus estimate for SoundHound's GF value?
They calculated it at $7.63 for a one-year time frame.
$7.63. Okay, wait. The stock price was $9.74.
Exactly. So the GF value actually suggests a potential downside of around 22%.
Whoa, that's completely different from the analyst targets pointing upwards.
It really is. It's a stark contrast.
Why such a big difference?
Well, it could be a few things. Maybe the analysts are weighting future potential, like new tech or market expansion, much more heavily than the GF value formula does.
Which leans more on history and current numbers.
Potentially, yes. Or it could just reflect genuinely different opinions on whether SoundHound's growth is sustainable and how quickly they'll reach profitability. It highlights that valuation isn't an exact science, especially for these fast-moving tech companies.
Definitely shows there are different ways to slice it. Now, Guru Focus also talked quite a bit about SoundHound's Q4 2024 results. Why look back at the last quarter?
Good question. Q4 gives us crucial context. It shows the momentum, or lack thereof, heading into Q1.
Sets the stage, basically.
Yes, exactly. Guru Focus noted Q4 revenue was strong, $34.5 million, up 101% year over year. And their full year 2024 revenue hit the top end of their own guidance.
So they finished last year strong.
They did, which probably set pretty high expectations for this first quarter and gives us a baseline to compare against.
Makes sense. What else from that Q4 report is worth remembering as we look at Q1?
Well, profitability metrics are key. GAAP gross margin in Q4 was 40%. That was actually down a bit year over year, they said, due to acquisitions changing the mix of business.
Okay.
Their non-GAAP gross margin, which excludes certain items, was healthier at 52%. But importantly, operating expenses shot up. R&D, sales and marketing, admin costs,
Hmm.
all grew significantly.
Why the big spending increase?
A lot of it was tied to those acquisitions, again, integrating teams, tech, investing in growth. So they posted an adjusted EBITDA loss and a non-GAAP net loss in Q4.
But they had cash.
Yes, that was a positive. They ended the year with $198 million in cash and equivalents, and importantly, no debt. They also gave their first look at 2025 revenue guidance, $157 to $177 million.
With the expectation it would ramp up through the year.
Right. So the Q4 story was strong top-line growth, heavy investment leading to losses, but a solid cash position and optimistic outlook. Classic growth phase stuff.
Spend money to make money, eventually. Guru Focus also pulled out some specific positives and negatives from Q4. Let's quickly recap those.
Sure. Positives included that record revenue quarter since going public, launching their voice commerce ecosystem as a new potential growth engine.
Oh, that's big.
It could be. Also, strong progress in the auto sector, getting more diversified across different industries, which means less reliance on any one big client and more recurring revenue.
All good signs. What about the concerns or negatives from Q4?
The main ones were that dip in GAAP gross margin we mentioned, a big GAAP operating loss, though, that was heavily impacted by a large non-cash accounting charge related to potential future payouts for acquisitions.
Ah, those contingent liabilities.
Exactly. Also, the rising R&D and sales costs hitting near-term profits and maybe some bumps in the road, integrating the acquired company's contracts and shifting away from older, less profitable deals.
Okay, great context. Now, let's pivot fully to the Q1 results straight from SoundHound's announcement. What were their headline numbers?
They led with the $29.1 million revenue, really hammering that 151% year-over-year growth.
Understandable.
They also made a point about customer diversification. No single client was more than 10% of revenue. That's good for reducing risk.
And margins for Q1?
GAAP gross margin was 36.5%. Non-GAAP was 50.8%. Now, interestingly, both of those are a tick down from the Q4 figures Guru Focus reported.
So maybe some of those integration pressures or business mix shifts are still playing out.
Could be. It's a subtle shift, but something to watch. Now, the earnings per share and net income figures had a huge difference between GAAP and non-GAAP.
Right. Explain that discrepancy. It looked pretty wild.
It did. GAAP diluted EPS was actually a profit of 31 cents per share, but non-GAAP was a loss of $1.06 per share.
Profit versus loss? That's massive.
Totally. Same story with net income. GAAP showed a net income of nearly $130 million. Non-GAAP showed a net loss of about $22.3 million.
Okay, what's causing that gap profit?
It's almost entirely due to a non-cash gain they recorded related to the fair value of those contingent acquisition liabilities we keep mentioning.
So the estimated future payout for acquisitions went down, and under GAAP rules, that counts as income now.
You got it. It's an accounting adjustment, not actual cash coming in from operations. That's why SoundHound strips it out for their non-GAAP numbers, which they argue better reflects the core business performance.
Which was still a loss.
Yes. Their adjusted EBITDA, another operational measure, was also a loss of $22.2 million. But importantly, their cash position actually improved quite a bit. They reported $246 million in cash and equivalents, still with no debt.
Up from $198 million at year-end. So the GAAP profit is an accounting thing. The operation is still investing and losing money for now, but they have more cash. That clarifies things. It really shows you need to look at both GAAP and non-GAAP.
Absolutely crucial. Now, beyond the numbers, SoundHound's release was packed with business highlights. This is where we see the AI tech in action.
Right, the real-world stuff.
Exactly. They talked up their progress in what they call agentic AI, making AI agents that can reason and handle more complex tasks, interact more like humans. They mentioned a new version, Amelia 7.0.
Agentic AI sounds like the next evolution beyond just chatbots.
That's the idea. And they heavily featured voice commerce. Lots of momentum there, integrations with dozens of restaurant brands, pilot programs with car makers, including one major one.
So ordering pizza or maybe paying for parking just by talking to your car's AI?
That's the vision they're building. They mentioned expanding with big restaurant chains like Habit Burger and Casey's, plus continued work with Burger King in the UK.
And automotive.
Big focus there, too. A collaboration with Tencent Intelligent Mobility in China, showing off their generative AI voice assistant running on the edge, meaning in the car itself, at the NVIDIA GTC conference.
Impressive. But it wasn't just food and cars, right? They listed a whole bunch of other sectors.
Oh, yeah, it was quite a list. Healthcare. Renewals and expansions in medical billing. At-home test results. Hospital providers. Retail. Pilot programs with fitness chains. Home service franchises.
Okay.
Energy. launching an AI agent for a big utility company, partnering with another firm called PowerConnect.ai IT renewals, with big tech companies in Tokyo, the UK for employee IT support. Travel and hospitality deals with resorts, expanding with a major hotel chain. Financial services continue to work with banks and insurance companies.
Wow, that's really broad.
It is. And they even mentioned wins through their channel partners in agriculture, tax prep, and travel again. It really backs up that diversification point Guru Focus made. They're spreading their bets.
That diversification seems like a key strength. Anything else notable stand out from their highlights?
A few things. A partnership with Pindrop for better security and voice authentication. That's super important for voice commerce.
Definitely need trust there.
Yep. They got recognized by ISG Research as a leader in AI ops. They showcased that restaurant drive-through tech, introduced brand personalities so car systems can sound unique, and showed off the in-vehicle commerce platform back at CES. It paints a picture of constant development and pushing into new areas.
Sounds like they're firing on all cylinders on the product and partnership side. What about the underlying financials supporting all this liquidity, cash flow?
They highlighted the strong cash position, that $246 million. Cash flow-wise, they used about $19.2 million from operations in the quarter.
Which is typical for a company investing heavily.
Right. But they also brought in a significant amount, about $67 million, from financing activities.
That explains the jump in the overall cash balance then.
Right.
Likely issuing stock or some other financing.
The release specified financing activities, yes. That influx more than offset the operational cash burn.
Okay. And finally, the outlook. What are they projecting for the rest of 2025?
They reaffirmed their previous guidance. They're sticking with the $157 million to $177 million revenue target for the full year.
So they still expect that strong growth to continue through the year, despite the slight Q1 miss versus consensus.
Seems that way, yes. They're confident in the ramp-up.
And they touched on that GAAP versus non-GAAP reconciliation again. Just quickly, why do companies provide these non-GAAP figures?
It really boils down to trying to give investors management's view of the underlying operational performance. They strip out things like non-cash expenses, stock compensation, amortization from acquisitions, and unusual or one-off items like that big gain on the contingent liabilities we saw.
So it's meant to be a clearer view of the day-to-day business.
That's the intention, yes. To show how the core operations are performing without the noise of certain accounting rules or non-recurring events. Investors generally look at both to get the full story.
Okay, makes sense. So wrapping this up, SoundHound posts really strong year-over-year revenue growth for Q1.
Huge growth, yeah.
Though one analysis noted it was just shy of analyst forecasts. The analysts themselves seem pretty bullish overall, with price targets suggesting significant upside.
But then you have that GF value from Guru Focus, presenting a much more cautious view on current valuation.
Right, that's a key tension. Meanwhile, the company's making tons of progress on the business front, expanding into restaurants, cars, healthcare, you name it. Their AI seems to be finding real applications.
Yeah, definitely seen traction across industries. And they've boosted their cash reserves, giving them runway, while reaffirming their growth targets for the year.
So they're clearly in heavy investment mode, prioritizing growth, which impacts the bottom line for now. The market seems optimistic, especially about things like agentic AI and voice commerce.
That seems to be the narrative, yes. Betting on future potential.
Okay, so here's the final thought to chew on. You've got these clashing valuation signals, optimistic analysts versus a cautious GF value. You've got a company spending significantly to grow. What are the absolute key things you would watch in the next few quarters to gauge if SoundHound is really on track for long-term success in this super competitive AI space? How do we see those cool advancements in agentic AI and voice commerce actually start turning into sustainable profit down the line?
That's the multi-million-dollar question, isn't it? It's about execution from here.
Definitely something to keep an eye on. Thanks for joining us for this deep dive.